Welcome back and good morning. I just absolutely decimated this acai bowl. I paid $11.99, and then they had the audacity to ask for tip. Maybe should I have? Probably. I mean, anyway. With that being said, let's get into it. Episode 2. Going into order blocks, liquidity sweeps, fair value gaps, because a lot of you had questions on fair value gaps and how to spot them and everything of the sort, and proper break of structure. Also going to teach you guys how to fully understand bias, because that's something a lot of y'all don't understand. And if you don't understand bias, it doesn't matter what strategy you have, you will get stopped out every single time. So you have to be able to understand bias. So with that being said, let's get into it. Apart from that, let's go to the chart. So Okay. So we're going to use. We're going to use our bias from. If you watch Sunday's technical analysis video, because everything we mentioned about price action played out in our favor. So we're gonna get into it. If you haven't seen the Sunday technical analysis video, I'm gonna play a clip for you right now. These daily draws liquidity. If I go in 4 hour or different time frame, I'm sure you'll be able to see it much more clear. Targeting that weekly fair value gap, pushing price to the upside. Why? Because if this does happen, look at this. Huge daily order block we would tap into. Following, bam, 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 bam. I would love to see that. Personally, I would love to play this out to the downside, retrace into the weekly fair value gap, and then push price up next week. Okay, so now that you've seen that clip, the first thing I need you guys to understand before anything is bias and how to spot it. If you don't go into the market with the proper bias, you'll get stopped out every single time. You have to know that. You have to be able to remember that before we can go into any other of the building blocks that everyone else wants to know how to put together, how to piece, how to pair, right? So, first off, to understand bias, what I always like to do, and I recommend every trader to do this, top-down analysis. You start from a higher time frame going down to a lower time frame. Doesn't matter what time frame you trade on, you should always be doing top-down analysis. Pause. Okay, so top-down analysis. Usually I like to start from weekly, then I scale down, of course. I think in the beginning of the week, everyone, no matter what time frame you trade on, you should always be starting from weekly, just so you can get an understanding of what price action is doing. Then you go to daily, 4 hour, 1 hour. Of course, you don't have to do this on every single time frame. Typically, I do it on weekly, daily, 1 hour, and then 5 or 15 when I'm actually executing, or even 1 sometimes. But you want to make sure you at least do it the macro time frame so you can see the bigger picture. Remember, macro means bigger picture within trading. How you actually understand where bias is going, and I will always testify this and always say this. A lot of people will say draw channels, draw this, draw that. Go on the line chart. That's the easiest way to do it. If you want to understand where price action is going, go to a weekly time frame, go to a higher time frame, and all you need to do, bam, line chart. You don't need to do the line chart with the dots. You can, because the dots showcase where price broke structure. But if you want, you could simply just do the regular line chart. It'll show you, okay, right now you can see what we broke structure to the upside. Okay, that's Haikanashi. If I go on line chart with dots, practice is I don't even know who that is. Anyway. Here we broke structure to the upside, we broke structure to the upside here, we broke structure to the upside here. So you can get an understanding of where price action is going just by looking at the line chart. And that is, for me, the simplest way that's helped me truly understand on a macro time frame where price action could go and where it is going. Now, the main thing a lot of people were asking about, not fair value gaps, not yet, but instead liquidity sweeps, how to actually properly spot the liquidity sweep on the chart. Let's get into it, because remember, in order for a liquidity sweep to be valid, you must have the bias proper. In order for anything to be valid, you must have the proper bias. But specifically with liquidity sweeps, everyone thinks that, oh, when a high gets taken out, that means it gets swept. Or when this high gets taken out or this low gets taken out, that means it gets swept. No, that's not what it means. There are specific highs that when they are taken out, that is where liquidity is residing. You have to be able to know how to spot those highs. If you can't spot those highs, you're screwed. So we're going to do this on a weekly time frame. Actually, we'll do this on a daily time frame, a more higher time frame, because it can help you guys get the picture a little bit more. An example would be as such. Let me go on bar replay and let's go right here. The best way to be able to spot a liquidity sweep, first by going on a macro time frame. Typically, I recommend an hour, or not an hour, a time frame above the current time frame you're looking at. So daily, I would go on weekly and check, but you can even do this on daily. If we look at daily, we see there's liquidity residing above these highs. I don't think, oh shoot, I do. Look at that. Look at me all prepared for the YouTube video. We have liquidity residing above these highs. How do we know that? Well, because we're in an overall downtrend market. On weekly, we'll see we broke structure to the downside. That's why I will always testify to break a structure, because break a structure always helps you get an understanding of where price action could go. Remember, you can't predict price action, but you can get an understanding. It's a game of probabilities. We have to put the probability in our favor. Keep that in mind. So overall, we're in a downtrend, meaning if we're retracing to the upside, either price action is just tripping out, or B, price action is getting manipulated in order to grab and draw liquidity, to make traders like you and I think, okay, we're going up and we're actually still going down. So within a downtrend, we should be forming higher highs, lower highs, lower highs, lower highs, lower lows. No, I'm not scripting this at all. This is literally just off the top of my brain. So I'm going to mess up a few times. Lower highs, lower lows, right? So don't you think it's odd when we come up and we start retracing, looking to take out, these lower highs, moving structure back to the upside when we're in a downtrend market? It's sus, isn't it? Think about it. It's a little odd. This, you have to use your brain a little. You have to use some common sense, right? So with that being said, we know there's liquidity residing above these highs. Why? Because these highs have yet to been taken out. We're in a downtrend market, remember. So we have two confluences so far that this could be a possible location for a liquidity sweep. And now we see price. What did it do? It came up, took out these highs. What did it do right after that? It broke structure back to the downside following that downtrend. Remember what I said. This is why I was pointing out, even for basic or intermediate traders, proper market structure. Let me find it. The path tool. Higher high or lower high, lower low. Lower high, lower low. Higher high, taking out that lower high, and then lower low. If I play the bar replay, that's exactly what happens. Bam, closes below, we continue downward. That is how you could spot a proper liquidity sweep. Note, I am going to give you guys homework on this. I want you guys to go in and spot this however many times, because that's how I learned how to do it. Went in, spotted it over 1,000 times, sat there, was like, you know what, I'm going to learn how to spot this, and I did. But you could take this with any example. So let's take it, I'm trying to find a valid one, even something like this. And note, even if it's a slight liquidity sweep, a liquidity sweep's a liquidity sweep. Look at this, still downtrend market. Now we're chopping here. Price comes back up one more time, takes out these highs, pushes price back to the downside. That's it. That's really it. A liquidity sweep, in simple terms, if I had to explain it to a fifth grader, price retracing to take out highs to push price back to the downside, following in trend. That's that. So I took a little break. I wanted to plot out some examples of liquidity sweeps so you guys can at least get an understanding, and I'm going to still kind of explain it for you. Okay. Still kind of explain it for you guys. The thing is, as much as I would love to go into order blocks and everything in this video, I 100% think we should break it up into pieces so you guys can actually kind of digest the information, because it's a lot of information to get at one time. So Let's actually get into it. Remember, overall following trend. Where are we going? Wait. V5 Okay, sorry. Where are we going? Bam. Downtrend, right? So, what is abnormal to us? Okay. Higher highs, right? Here you could see we were forming lower high, lower low, lower high. Now, of course, we would have expected a lower low, but price came back up, took out liquidity, pushing it back to the downside, then creating that lower low. This entire area, remember, like I said in the last video, I did plot this out as an example in the last video. This entire price range from 1951.11 to 1972 then became an order block. That will be in the next video, but you know, I'm just pairing it so when we go into the next video, not clueless. Next video is about order blocks. That entire price range then became an order block. What happened? Price retraced into that price range, continued moving back to the downside. Another example here. Lower low, you know, still creating lower lows. Well, if we actually want to zoom in and take it a little more technical. Lower high, lower low, lower high, lower, higher low, higher high, taking out both of those highs, breaking structure, continuing back to the downside. This entire price range then became an order block. You can see right here from 1932 to 1946 became an order block. What did price do here? Re-enter 1932, pushing price back to the downside. I cannot make this stuff up. As much as I would like to, I cannot make this stuff up. This is how price action moves. And so those are two examples there. I'm going to show you another example here. What are we doing? Uptrend, right? What is this? Higher high, higher low, higher high, higher low, higher high, lower high. Took out these lows for liquidity, then pushed price back to the upside. What did this entire price range become? From here, 1909 to 1934, order block. Price tap back into it here, rejected wick back to the upside, right? Before closing and breaking structure, you know, invalidating that order block. Took out this low, made the move to the upside. Remember, an abnormality within trend. So trend breaking. Right here too. What are we doing here? Downtrend. Price came down, lower high, lower low, lower high, lower low, higher high, took out these draws of liquidity, pushed price back to the downside, creating that lower low. You see, now you're starting to maybe get it. Hopefully you are. And if you aren't, that's why I'm going to give you guys homework. What I do want you guys to do, I want you guys to go in 1,000 times, go to the chart, open trading view, find a pair, and plot this 1,000 times, and watch every single video on liquidity sweeps. That's a joke. I'm not joking. That is not a joke. Don't think that's a joke. I'm being dead serious. Okay, go in 100 times at least. Plot it out 10 times per time frame. Do that 10 times per time frame. Once on 5 minute, once on 15, once on 1 hour. Actually, do just macro. Do 25. Once on 1 hour, once on 4 hour. Oh my gosh. 25 on 1 hour, 25 on 4 hour, 25 on daily, 25 on weekly. But understand what you're plotting though. Remember, I said an abnormality within trend, us taking out certain highs or breaking structure off of what trend actually is. That's also how trendline traders play breakouts. So, another example here. Let me bring out my tool. Bam. Change of trend, lower high, lower low, lower high. Of course, we'd expect that lower low. Higher high, this entire price range from here, 2019, all the way to 2048 became an order block. What did price do? Tap back into it, push price back to the downside. Like I said, I can't make this stuff up. There are a few more examples here, but apart from that, that is your guys' homework. Go in, plot this 100 times, get comfortable with understanding how to spot proper liquidity sweeps. But the main thing I want you guys to take away from this isn't liquidity sweeps, it's following overall trend, following overall bias, because if that's not correct, your trading will suck. I promise you that your trading will suck. You will not see profits, you will not see consistency. You must understand bias. You must be able to open a chart with no technical analysis and know immediately we're bullish, we're bearish. You have to know this. If you don't, you're screwed. But apart from that, I love you guys. I thank you guys for watching. Next video will be about order blocks. Hopefully it will be uploaded tomorrow if this is uploaded today. And if it's not, it most likely will be. But apart from that, continue following your bias. Continue killing the market. I don't recommend you guys trade today within the next hour. I don't think any. I hope none of you are. You better not be trading. Better not. But if you are, good luck on Fed. Good luck on Powell's speech. Tell me if you get stopped out or tell me if you hit TP. But apart from that, I love you guys. I thank you for watching. And remember, Jesus loves you.